I think everybody knows Willem, and I have only one question before Willem takes over. Who's following Willem on Twitter? Oh, quite a lot of people. He's very famous, he's popular. A lot of people have seen him on the screen in the last 18 months. Today he's here. Welcome, Willem. It's a pleasure for me and I think for many of the people. So please, it's your stage now.
Thank you. Thank you for inviting me here. I thought we should have a little party because finally it's all happening. For 20 years I've been warning that one day the debasement of currency would be so enormous that we'll get some real inflation, and I think it's finally happening. So I don't know what people are still so so downbeat sometimes. If we look at the price changes in the last 12 months, this is all from futures. Doesn't matter if you look at coffee or oil or natural gas, it's all up double digits, sometimes even 50 to 100%. And down there you have silver, 4%. So silver is the only metal still trading at 50% of the 1980 high. So I bought a lot of physical silver myself. I've been warning about debasement of currency for 20 years. This is in the early 2000s when I was working as a Dutch market commentator for RTL News. And I always advise people to start investing in physical gold and silver. I even stopped working as a journalist in 2008. Just after the Lehman crisis, I started 2 companies. One was Amsterdam Gold. We only had 8 products for sale, 4 kinds of silver bars, 4 kinds of gold bars. And I sold that company 3 years later when we had yearly sales of 100 million euros. But there's no profit margin on selling gold and silver bars, so I thought I have to get rid of that company. Yeah, that's me. Don't take a picture of the screen. That's a lot of gold and silver in the vault of Amsterdam Gold. It's not all mine. Part of it is mine. And I also started another company which is called the Commodity Discovery Fund. Many people here familiar with my face and my name know me because of the Commodity Discovery Fund. It was the most stupid decision of my life to start a commodity fund in 2008. That was the high of the last cycle. And since then we went down, down, down. But we had 4 pretty good years. And I think something major changed at the end of 2015. That was the low for the commodity markets. We had a great year in 2016. Then we had a retest of the lows of 2015 during the Corona crash last year. And then we had a perfect double bottom. Commodities at a 100-year low valuation against all other financial assets. So I think we'll do well. If you look at, this is not our return, but this is the outstanding participations, so the number of shares in our fund. And then you can see we had net inflow every year, even in the worst years. So we have around 200 million Canadian under management now, and we started with a few million. And we see very, very strong inflow. You can see that the last 18 months from high net worth investors really getting scared now about debasement of currency. We don't have to do any sales talks anymore. I don't do any presentations anymore for new investors because they understand the story. I met 2 new investors this week. They both started with 1 million, just high net worth investors, not institutional money. If you look at the growth of our fund, last month we were 120 million assets under management. Currently it's 137. Last month was plus 10%. This month we're up 6-7%. So it's a very easy sell. I'm also author of a few books. I'm best known for The Big Reset. Big Reset has an undertitle, is War on Gold and the Financial Endgame. I wrote this about 2014 when nobody was using the word reset. Became quite popular, has been translated into 7 languages, even De Große Neustart, even in German. You can buy it on Amazon. And in The Big Reset, on the back flap, I wrote a system reset is imminent. The world's financial system will need to find a new anchor around 2020. That was 2014 that I wrote this. And Everybody thought I was crazy. My core thesis about this big reset, not the great reset, but the big reset, is we need to find a new anchor for the world's financial system. Every 60, 70, 80 years, you see there's a new anchor. Used to be British pound, then became the US dollar. Now we're in the last phase, I think, for the US dollar as the world reserve currency. Will the dollar disappear? No, British pound is still there, but there might be a change within the monetary system. I'll show you why in a few moments. We need debt restructurings because massive amount of debt, and I think a dollar devaluation will be needed, and a dollar devaluation is a gold revaluation, so that could be in the cards. And then we had Klaus Schwab of the World Economic Forum publishing his new book, The Great Reset. This was 4 months after the start of the COVID crisis. I'm a fast writer myself. I wrote 7 books in 10 years. I know it takes a lot of time, but he had The Great Reset finished within 4 months. That's quite something. And he tells everybody that this pandemic represents a rare but narrow window of opportunity to reset our world. So there you have it, it's official. They will use this crisis to reset our world. It's so important that Time magazine even published this cover a few weeks after Klaus Schwab published his book. Well, what will the reset be all about? Well, the IMF is quite clear about this. There's a new Bretton Woods moment. Well, people who know a bit about history understand that the last monetary reset was in 1944 when the US invited 44 countries at a conference in New Hampshire, and they were discussing, a monetary reset. They switched from a gold standard to a dollar standard, and the US promised other countries that the dollar would be as good as gold, and dollars could always be exchanged for gold. And this was true until August 1971, when the US defaulted. And now it's time for another change. And I have some circumstantial evidence to support this claim. Mark Carney, who used to be the governor of the Bank of England, he was invited to do a speech in Jackson Hole. That's the yearly conference of the Fed in the US. And during this lunch presentation, he warned that the dollar is too dominant and it could be replaced by digital currency. So there you have it. There will be a new anchor for the world's financial system. It won't be euro, it won't be the renminbi or yuan, but it will be a digital currency. The US Treasury Secretary Janet Yellen recently said in a speech that she's prepared, the US prepared to build a new global economy from the ground up, a new restructured world order. So that's maybe Bretton Woods 2 and a little bit more. Mark Carney, in his lunch speech at Jackson Hole, actually called for a new global monetary system to replace the dollar. This is from the Financial Times. Speeches like that are not are prepared well in advance. There was also a the full speech was available at the website. Is still available at the website of the Bank of England. So you know these comments are not a slip of the tongue. And I'm always surprised that people take it for granted and then they just continue and they don't ask themselves what will happen next. He also said in another speech there will be a change in the unsustainable monetary system. And then we have a speech by the UN Secretary General that was this year, and he goes full reset. And in a speech he said we're at risk for a breakdown of the global order and a future of perpetual crisis. Well, since March 2020 we know how that feels. And he says we need a breakthrough scenario. So it's pointing to a reset as well. Breakthrough scenario means a breakthrough. We need to do things very different. And AP published this news footage and said the world's at a pivotal moment. And if we look a little bit further into his speech, he says this pandemic also exposes deficiencies within the global financial system. We have to tackle these deficiencies and he proposes to have a new Bretton Woods every 2 years in which the 20 leading countries, the G20, need to come together in a special conference. So expect big changes to come. And central bankers, like politicians, always ask themselves, how can we spin this story? How can we spin these changes? Well, they will spin it because it's needed because of COVID. Without COVID, everything would have been fine. But we also need changes because we need to fight the climate system. There's another speech by Mark Carney in which he says that the world needs a new sustainable financial system to stop runaway climate change. So there you have it. That's the spin. It's needed because of COVID. It's not needed because of the default by the US in 1971. No, it's needed because of COVID. Without COVID, everything would be fine. And we have to do it to fight climate change. So that's the, and what will they do? They'll try to sell you climate bonds, like they tried to sell you war bonds in the First World War and the Second World War. So all institutional investors are now pushed towards accepting climate bonds. And this is, sold as a way to help the world and to save the climate as well. Well, I think this is the slide I have to say thank you to Ronnie. I always steal a lot of his research. You even had the last one, the updated version, which shows the money supply is going down a little bit now, but even when you go down a little bit, you still the money creation, the money growth is still larger than in the 1970s. So it's not strange to see inflation running high, but I think Ronnie covered this very well. And if we look at the balance sheet of the Federal Reserve, that's the white line. We had to rescue world's financial system in 2008 after the collapse of Lehman, during the great financial crisis, which you can see, that the balance sheet of the Federal Reserve, it jumped less than 1 trillion. And during the COVID crisis, March 2020, since then, we saw a doubling of the balance sheet of the Federal Reserve. And it shows you that the amount of money being pushed into the system to stabilize it, it's much larger than what we experienced in 2008. And this also explains why we have this breakout of inflation now. Interest rates are at zero, so they can't do anything there. So I think a gold revaluation might be next. There are very few possibilities for central bankers to stabilize the system now. A gold revaluation could really help them, since the US has 8,000 tons of gold on their balance sheet, both on the Federal Reserve and the Treasury, and that's on the balance sheet at $40 per ounce historical cost price. So if you revalue gold towards $8,000 per ounce, that would create a lot of assets, good assets on the balance sheet. And when you then restructure the debt, the balance sheet of the Federal Reserve and other central banks might be helped a lot. And all central banks worldwide own gold. None of them owns Bitcoin, so that's almost a guarantee that Bitcoin won't be used in a monetary reset, and gold might be used. So for all gold investors, discoverers, explorers, that could be a nice black swan. If we look at total debt, Ronnie also showed this. It's 300 trillion now, while it was 200 trillion during the credit crisis over 10 years ago. This is the latest number of the official inflation. It jumped to 6.2%, that's the red line. But if you use the model, the inflation model, which was used in the 1980s, and Mr. Williams of shadowstats.com, he uses this old model 40 years ago, the official model. And when you calculate the current inflation with the old model, it's almost 15%. And I think there's some tricks being played with the official inflation numbers. Strange news coming from China in the last few weeks, even the last few days, that the Chinese advise their over 1 billion citizens to stock up on food. I don't know why. Do they expect war? Do they expect a transport crisis? Do they expect more inflation? We don't know, but it's strange. This one, Ronnie, I think you didn't use this one yourself, but that's one of the best. It shows how much of the new issuance of all debt by governments is being bought by central banks. And then you can see up until 2007, the start of the credit crisis, things were quite normal. Institutional investors and private investors were buying up the bonds. And then the central banks needed to step in. Then you got a bit of normalization between the QE 1, 2, 3, and 4. And then we had the major crisis. It started with the repo crisis actually in September 2019. Didn't have anything to do with COVID. And then the Federal Reserve started buying up treasuries again. And then we had the huge crisis March last year. And you see that central banks are buying almost all bonds being issued. So there's no private, there's almost no normal private or institutional market for bonds anymore. Ask Italy, ask Greece, and ask Japan. In Japan, the Bank of Japan is the single largest holder of Japanese stocks now. We're all Japanese now. In Japan, the crisis started in the early 1990s. They started QE. They invented QE, and they now own 7% of the entire stock market, so they support the stock market as well. And roughly 40% of all outstanding debt, government debt, is owned by the central bank. So this is the nuclear option when the central bank is directly buying up the government bonds. When you ask yourself how can stocks keep rising when the economy is not that good, I always show this slide. Stock exchange in Caracas. Who's invested in the stock exchange of Caracas? Anybody here? Of course not. But the stock exchange in Caracas kept going up as well in the worst economic crisis possible. So when stocks are going up, it not always shows you the economy is strong. I think stocks keep rising because like real estate prices keep rising and Bitcoin keeps rising. And precious metals will keep rising because of the debasement of currencies. I meet many high net worth investors. We have 1,500 individual high net worth investors into our fund. And they understand you now have to buy all the government can't print. And there's a lot of money out there which used to be in stuff the government could print, bonds, 100 trillion, cash. And that's now put at work. Bill Gross, he was the bond king. He became a billionaire selling bonds to institutional investors. He now calls bonds, after he milked the system for 40 years, investment garbage. That's honest. Well, he's retired, you know, and then they can get honest. They'll use this crisis to propose all kinds of changes. This is one of the examples. We had a smart Dutch pension fund. They sold, after 2 years of negotiations with the central banks and regulators, they were allowed to sell 10% of their government, of their bond position. And the proceeds, they invested in physical gold, not futures, physical gold and some other hard assets. So these are the first brave institutional investors. Most of their peers don't dare to do this. I spoke to the fund manager. You really need to be brave in an institutional world to do this. But privately, they all choose to invest in all the government can't print. We have some high profile insiders in world's financial system, traders like Paul Tudor Jones, saying now on CNBC, which used to be the cheerleader for Wall Street and the US government, that he's going all in on the inflation trade. And that's what we hear from many of these billionaires who go all in on inflation trades, including Bitcoin. Paul Tudor Jones. He puts 5% of his money in gold, 5% in Bitcoin, keeps 5% in cash, 5% in commodities. So people are coming our way now. So that's why I said we should have a party started here, because we used to be a small crowd. We're still a small crowd. But one day, many more people will come to our side. And there's always this fight, this stupid fight between gold lovers, gold bugs, and Bitcoiners. That's a stupid fight because gold and Bitcoin are brothers or nephews or friends or neighbors, because both fight against fiat money and both are a place to hide against the debasement of currency. And even the chief investment officer of BlackRock, well, that's a big name. They invest a lot of institutional money. He said on CNBC, I could see Bitcoin going up significantly. So Bitcoin has passed this first phase in which only the nerds and crypto anarchists were involved. And now it's getting an institutional asset, it's getting regulated. And I was very happy to hear it would be regulated, because once it's regulated, it's a normal asset class. And institutional investors can invest in it. And Mark Valek and Ronnie, they were very bright because they already started a fund which used gold and Bitcoin. They understood very early on, these are friends, these are not enemies. So this was made yesterday. I had a new interview being published. I gave an interview with Daniele Cambone, who used to be with Kitco. And she made this graph to edit it it's on YouTube now. So I think it's a nice one. Should be a meme going viral. So all the gold bugs should stop hating Bitcoin, and all Bitcoiners should stop hating gold. What happened to Bitcoin? Well, Bitcoin is the fastest horse in this race. So you have the debasement of currencies. We should buy all the government can't print. Government can't print Bitcoin. This is the fastest horse in the race because it's the youngest horse. It's only been around for 12 years, can run a little faster. And it has gone up 9% every month on average, including all the crashes. It's my single largest investment now. And I even did another large investment in the DeFi space. I won't touch on that, but study it. But I also bought gold and silver, even the last few weeks. Gold's on the verge of breaking this beautiful pattern. And once gold goes over 2,000, and then I think we could see a very, very quick run towards 2,500 and 3,000. So why has gold and silver, why have they seen less gains than other metals? I think the reason is here. This Bloomberg print of Bloomberg screen. The Department of Justice of the US has said that the JP Morgan's metal desk was a criminal enterprise, spoofing the market time and again. So that's official now. Yeah? Study it. My book, The Big Reset, can be downloaded for free on our website, Commodity Discovery Fund. If you want to know the details about the war on gold, it has been ongoing for decades. Well, we as investors are very interested in the supply and demand of all the metals, not only gold and silver. There are more and more shortages to be found. We warned for this for years. This is all happening now. So we have inflation, we have shortages. I can advise you all to download When Money Dies. It's a PDF, it's online, it's for free. It describes what happened during the Weimar Hyperinflation. If you study the Weimar Hyperinflation, now it gets scary, they're leaving the room. It's German. No, sorry. If you study the German hyperinflation, it starts very, very positive hyperinflation. Everybody's happy. Stocks go up, real estate goes up. There's a labor shortage. There was a labor shortage in 1921 in Germany. So it felt very well. Reminds me on the current situation. If we look at copper, in the next 26 years, we'll need more copper than we used in the last 150 years. And we all know how long it takes to open a copper mine. That's why Robert Friedland of Ivanhoe always tells you you'll need a telescope to see the copper price in 10 years. Well, I think that's Robert Friedland, but let me be a little bit less enthusiastic. I'll say the copper price will go higher. There will be shortages, more shortages. We had palladium shortages. Palladium price tripled in 2 years' time, the last few years, because there was a shortage of physical palladium. And you can't play any paper games, paper future selling when there's a physical shortage. LBMA warns about silver shortages coming. Concerns that London would run out of silver. Buy silver. It's the best tip I can give. This Singapore dealer, I visited his vaults in Singapore. It's a private company, just like Amsterdam Gold, the one I founded in 2008. You can store nickel there, cobalt. You can store almost anything physical in his vault, even Bitcoin. And look, he's preparing a vault for another 15,000 tons of silver. So one day there will be a little sign, and I think first you'll see the silver price shooting up towards $100 per ounce, and then there will be press reports that there are shortages in the market, and the Sonys and Samsungs can't allocate enough physical silver. Well, we as investors, we're called the Commodity Discovery Fund. I'm the founder of Commodity Discovery Fund. I've been a private investor in this space since 2003. And I learned around 2004 or 2005, if you invest in small exploration companies working on the best discoveries, then you should do well. I first started the Middelkoop Discovery Alert Service. It was in 2005. My best stock tip was Aurelian Resources, was up 1,700%. After we tipped it to investors, this was beginner's luck, because Aurelian Resources discovered the Frutal del Norte deposit 6 weeks after we tipped the company. And I was a real beginner then. And now after some 15 years and 69 exits and hundreds of other investments, I think we understand discovery and investing a little bit better. Oh, he wants to take over? We have a discovery award every year. This year it was awarded to Greatland Gold for their wonderful discovery in the Patterson area. In the first 8 years of our fund, we fully concentrated on North America, Canadian markets, everything listed in North America. In the last few years, we did an awful amount of research on Australia. There are some 400 exploration companies listed there. And the most significant... Sir? Sir? Okay. And the most significant mineral discoveries are being made in Australia. And so it's very interesting for us to research Australia a lot. The nominees this year were Chalice Mining, wonderful PG discovery near Perth, Australia. De Grey Mining, credible discovery, I think 20 million ounces when all said and done, in the Pilbara region. We started to look at the region after the discovery of the melon seed nuggets by Novo. That turned out not to be a good investment, but De Grey was. Great Bear Resources, amazing discovery in Canada. And then Greatland Gold, and Greatland Gold was the winner this year. We have had 69 exits. So after we made a discovery, all these dots on the map were companies which were bought out by a major looking for reserves. And if you look at the agenda, there's 51 gold projects, 3 silver. Well, we're metal agnostic, although we prefer precious metals because of the debasement of currencies. We like to have more precious metals into our portfolio, but we like tier 1 and tier 2 discoveries and metal agnostic, and we don't care where it's being discovered as long as it's not in Russia or Venezuela or North Korea. We put in some stink bits in March 2020. I was having COVID myself at that time. I never felt that bad. I was real sick, had the flu, or felt like the flu, thought I had the flu, but it was corona. And the stock market crashed. And then one day I phoned my trader and I said, now it's time to buy Mac Silver, K92, Great Bear, and we put in some stink bits. And I think Mac is trading 25 now. K92 is trading around, what is it, 8 or 9. Great Bear is trading 20. So that's all in 18 months. So that explains why we had 85% return last year. Our best best returns in our core positions last year were the Grey Mining and Greatland Gold. So we all like 10 baggers, but 20 baggers are even better. And I think in the future, because of all the shortages, once you do a tier 1 discovery now, you'll have 30, 40 baggers. Look what happened with Chalice. We were investing in Chalice before they made a discovery, but we sold out 5 months before they made a discovery. So I showed you this. That's the growth of our fund. I always tell investors that they should sell their investment into our fund. Oh, that's a Dutch word. Groei is growth. They always should sell their investment into our fund when we reach 1 billion, because I've seen it before during other cycles. We saw funds specialized in exploration growing towards 1 billion during the bull market, and then they were fucked, sorry. But they couldn't sell. It's like Eric Sprott. Eric Sprott can't sell, he can only buy. So that's why we decided to only invest 50% of our fund into exploration companies and the other 50% in highly liquid ETFs, because we never want to be into a position that we can't exit our positions because we have redemptions. Because when you get redemptions, you need to sell in a market with no buyers, and that's why we've seen these failures. You know, it happened to Sprott, it happened to Pine Tree. 1 billion fund went to zero and killed the whole market. So that's a big risk in this. Well, Ronnie, thanks again. Should pay you dinner tonight. I love this graph. It shows the valuation of commodities against S&P 500. I think I haven't seen your last update. I think we just up 1 millimeter from the bottom now, because the S&P is commodities go up. But S&P is going up, I think, even more. So this ratio didn't change much. So there's a very strong decade ahead, and maybe 2 decades. How much time do I have? 2 minutes? 4 minutes? That's great. Well, what's my last slide? Any questions? Thank you.
Yeah. So, please.
Willem, so you and Ronnie are talking a lot of economic logic, which makes sense in terms of the status quo pre-COP26.
Yeah.
What do you think we're looking at? It's the last day of COP26 today. What do you think the policymakers are going to bring back home?
Oh.
How do you think it will affect us?
Oh, it's so clear. I'm not a climate denier. Climate is changing. But the GOs and other people here in the room, they know climate has been changing always. Climate is changing, so there's no denial about that. There's a lot of CO2 in the sky and higher up. No denial about that. We don't know what part CO2 plays in all of it, but it doesn't help. But now we have this problem that people in power who see everything failing, from the pension system to the monetary system to everything, they can blame it on COVID, and they can use the climate crisis, because nobody can be against any positive action to help make a better climate. It's for your children. It's not, Willem, it's not for you, it's for your children and your grandchildren. You can't be against that. But we all know it will be very hard. I made a study of climate myself because I wrote another book. It's called The Tesla Revolution. It's also available in German. And we have one chapter on climate change there, because I wanted to know it. I had a good researcher, he researched it. Once climate change starts, and once the atmosphere heats up, it takes a few thousand years at least for the spiral to end. And I think anybody who states that he can change that process by putting a few trillion of investments into green bonds, and that's cuckoo. And of course, we need to change our energy mix, but that's because the easy oil is gone. That's another story. But politicians combine it all now, say we need to get rid of fossil fuels, which is true because we're running out of it. And they use it to their political advantage now to tell you, and we'll have climate lockdowns. After COVID lockdowns, we'll have climate lockdowns. Google it. You'll find the first stories about it. And there will be a CO2 check if you're able to fly. So, and they will use it to say we need to change the system, otherwise we'll all die. And I see people in the Netherlands, we're called the low countries, We're sub-sea level. So many young people are afraid that the Netherlands will be flooded again. If you look at the graph of the rise of the sea level, has been constant for the last 200 years, 1.5 millimeters per year, because the land is going down. Yeah? There's no hockey stick, there's no acceleration. But people, they don't believe the facts, they believe what the politicians tell them. And it's scary. But it will help to bring a monetary reset. But there will be a lot of financial repression. Like there's a lot of repression to lock you up in your own home or whatever. So you need to be very flexible. We have a lot of high net worth investors, and they're worried about the debasement of currencies. They're worried about their investment. But in the last 12 months, they all ask me, Willem, where should I relocate to? Should it be Dubai, or should it be Sweden, or should it be... So people feel this, and I always tell them, don't make any decisions now. Be very flexible. I have a place in the Netherlands, I have a place in Switzerland. I can drive to Switzerland. I don't have to fly there. It really helped me out in the last 12 months. But be very flexible. Sorry, too long answer.
It's okay, it's good. Okay, Willem.
Thank you.
Thank you very much. This was very interesting.
It was a pleasure.